Well, today's sell-off is just another example of that frustrating roof we keep hitting. While stocks remain close to multi-year highs, we can't seem to crack that ceiling of about 14,000 on the Dow. While our next guest doesn't see a crash, he does spot some very clear signs that we are due for a pullback. Joining me now is Jeff Reeves. He is InvestorPlace.com editor. Jeff, good to see you. So is this it? Have we begun the slide?
Well, yeah. I mean, the funny thing is I started to write this article about a contraction, last week because what I saw were some systemic signs, and we've seen some pretty good excuses. Maybe excuses isn't the right word, but the Fed minutes that came out, the Italian election today. It's like I feel like the market was just waiting for a reason to sell off, and that's definitely what we've seen in the last couple trading days here. I don't want to scare people, but I do think that it's only the beginning. We have a little bit more to go before we're sold off.
But if we can put up the Dow on here, because 14,000 is the number that literally that it had 14,000 and change on Friday. It ended at, and today we were down about 200. 14,000 is just a number. I don't like to get into these technical number things, but that does seem to be the ceiling that we keep hitting, right?
Yeah, I mean, there's a reason that technical analysis exists out there. It's hard to understand sometimes. It's not the only way to use market analysis, but it's valid. I mean, there is a ceiling there, whether it's because of sentiment or because it's the charts. It's a number. It's a nice round number that's hard to break through. And the fact of the matter is, we've seen some decent good news over the last 3 months, but we've seen a big run up. So the question is, what's the next handhold that we have to climb this wall? And we've seen a bunch of headlines, but nothing I think is really substantive enough to catalyze another leg up. So that's one of the reasons why I think we've got some complacency. We're kind of overdue for a pullback if this rally is going to last later in the year or into 2014.
Let's get to the specifics that you talked about in terms of what might lead to a big pullback. One of the things is all these bloggers and newsletters telling you that you have to go entirely into equities. You don't think that's a good sign. Why not?
Yeah, I mean, you got to understand, I know I have a lot of people who are friends of mine who have newsletters, they're stock pickers. It's a tough gig. I don't want to paint them all with a broad brush. But the fact of the matter is these people have a vested financial interest in making you bullish, right? Because you're not going to buy their products for $1,000 a year or whatever if you don't think the stock market's going to go up. So there's this natural kind of rose-colored glasses-ness about the market that these people see. The last time that they were this bullish was 2007 and 2008 for a reason, because they make more money when investors want to buy stocks. So they it's a little bit of tail wagging the dog. I would be very cautious when a lot of people who sell stock-related products are bullish because it's in their best interest. So
well, exactly. When everybody is going in, the advantage goes to the seller, right?
Exactly. And the other thing is that people have a nice track record to tout after you've already seen a good run-up. I'm sure that some of the marketing messages out there say, hey, look at my 3-month return. Well, that doesn't mean your next 3 months are going to be decent. It might get a sucker in the door now, but that doesn't guarantee any future returns out of that.
All right. Well, we just saw on that blackboard of the reasons why you see a pullback, options activity pointing to a sell-off. What's going on with options activity to point to that?
Yeah, this is a little bit complicated, but there's this thing called skew with options where, there's a differentiation between pricing and there's volatility, and it shows you whether traders are generally favoring puts or calls. And if you look at the way things have been playing out lately, it's really hard to find people who are actually buying calls on stock, and there's a whole lot of people trying to sell calls. People are favoring puts, and that's not to say that this sentiment indicator alone is the tell-all for the market, but it's good to know that generally speaking, options traders are favoring the put side or the downside of the market right now. So you could see it as an opportunity if you're really, really bullish, because buying calls is really cheap right now because nobody's doing it. But again, you have to realize nobody's doing it for a reason.
Now, another one of your points was complacency. But when you have a day like today with a 200-point drop-off, doesn't that shake complacency to its core?
Yeah, I mean, we were complacent about a week ago. I don't know if that point would actually carry through right now.
Right.
But the fact of the matter was, I think people were confusing complacency with optimism, and that's what we saw, is that in the absence of news, we didn't necessarily crash, but that didn't mean that the rally was sustainable or that we had another leg up ahead of us. As you saw, people just looked for excuses, reasons to sell, whether it was the Fed minutes or the Italian election or Boehner speaking today. It was complacency, and as soon as something shook that, the market kind of got shaken too. So don't confuse complacency with optimism. I think that's a big pitfall for people.
Okay, and just the opposite side of optimism is there is some outright pessimism. There are some people that are very pessimistic, and once they see a sell-off begin, even if it's today's activity, just one day's activity, they might start accelerating their sales.
Yeah, that's right. And I mean, in the last couple of weeks or so, it's been very specific. I mean, the people who have came out and were bearish on housing stocks and said housing is screaming a short, they made a lot of money today because they were right. Housing stocks sold off across the board. There was also people who were talking about a death cross for gold and how we were in store for trouble there.
Right.
Gold sold off. So I kind of look around and see what other people are talking about. They're very specific on asset classes before. If people start to think there's money to be made in shorting generally, again, that's not to say that there's not going to be a short squeeze. Shorters can be wrong, but it's important to know what side the sentiment's on.
Jeff Reeves, InvestorPlace.com editor. Good to see you, Jeff. Thanks for coming in. Appreciate it.
Thanks for having me, Dave.
Lauren?